Good afternoon, good afternoon, good afternoon. It is July already, Q3, and halfway over already. So, middle of July here. I'm actually in Asheville, North Carolina, recording this, about to go into a mastermind event with about 150 of the operators in the country. But I want to give you guys the market update really for this past month because there's a lot of things going on in this market, and we are here to give you advice on housing. There's a lot of things going on in this market. I've been hearing a lot of different experts, hearing a lot of different things, but I've really been looking at the data. I've been looking at the data from our team. I've been looking at the data from the national news. I've been looking at the data from our local MLS. And really, I'm here to give you the expert advice on housing that you need. The craziest thing in this market is just what are you going to do? Are you looking to buy? Are you looking to sell? Is it the right time to buy? Is it the right time to sell? Is this market going to crash? Is this all fake news? Is it just news stories terrifying instead of clarifying? What is going on in this market? I'm here to give you expert advice on that. So here we go. So one of the things that we've seen here is, hey, is this market going to crash? Is the market going to completely down? Is it going to be okay? We're just in this period right now. And that's where a lot of experts are torn. Obviously, nobody has a crystal ball. I'm not here to say, hey, this is what we're going to do. I'm here to give you data. You make up your own conclusions. I'm going to give you my opinion. And really, my opinion is that, yes, things look ugly, but the data is telling us that it's going to be okay. It's going to be okay. And so here's the quick breakdown of it. Right now, offers received, down. Offers over asking price, down a little bit. Sales, down. Inventory is on the rise. So let's break down in the data. So throughout history, during a recessionary period, and really the data is coming out for this second quarter just came out. And really a recession is any time that there's 3 straight quarters of a declining GDP. And right now we're already at 2. Expected to have a third. But the big difference here is you have to realize that just because we might be in a recession, and most likely we are, based on what the third quarter will be, but it doesn't mean that there's a housing crisis. Historically, you'll see here that recession doesn't equal a housing crisis. Home prices during really the last 6 recessions, from the 80s to the early 90s, to the big one we had in 2008 to the 2001, and then all the way to the coronavirus in 2020 a couple of years ago, you can see here really the only one that truly really lowered housing prices was in 2008. You can see a major dip in housing prices. But we also know from that market, especially if you've been following these market updates, that 2008 was completely different. The inventory was super high. Prices were about to collapse. The lending practices, so many people were over levered on their properties, and that's not the case now. Very low inventory still right now. You have lending practices that are very strong as we speak, and also there's just buyers that are sitting on the fence right now. So here's what that looked like really over the last period of time, those different recession periods. That other chart shows that. This is the actual chart of that. But you can see here, a lot of times these interest rates, these mortgage rates, actually dip lower coming out of the recessions. So what we're seeing here is, yes, we are seeing a major spike in interest rates. Now, historically, you can see here, they're still very low compared to other times in the period of history. This chart goes all the way back to the 70s. But period-wise, this is still very low. And knowing that in the next 3-4 months, there could be a downtick in the actual interest rates based on based on what we've seen in previous recessions. On average, about 1.3, 1.4% that interest rates have gone down after coming out of a recessionary period. So again, this could come in the fall, winter time, just based on historical data that we have seen here. Right here it is, 1.8% that have lowered there. So where are we at right now with mortgage interest rates? 5.72% as of yesterday on average. You can see here, really earlier this in June last month, it was well over 6% with these interest rates, low sixes. Right now, it's about 5.72. It's been hovering around there. Obviously, the daily is going up and down as we speak, but right now it's hovering about 5.72%. Does it mean that it might jump up in the sixes? Yes, but most likely it's going to remain around that 5.7 to 5.75. So what does that mean? Well, I brought you out a chart because a lot of people, they see an interest rate, they can't correlate it to what's going on. So at the beginning of the year, we were about this time last year, we were about 3.86%. What does that equate to in our market? Average sales price about 300,000. It's actually a little bit more, but I'm going to use 300,000. Nice even number here. Your payment at a 3.86% interest rate would be about $2,048. Now this is at 5.88%. This is not at 5.72 right now. Your payment has risen to about $23.97. So right now, that is what's holding a lot of home buyers back. They're seeing the interest rates climb. They're seeing what they could have bought that property for last year, and they're like, whoa, the mortgage was cheaper back then. Yes, it was, but you also have to realize that we're not going back to those interest rates necessarily in those threes. We're going to be hovering around this range. So they got to get used to seeing this payment. So right now, my firm belief is buyers are in a very, very scary place because they're thinking of what it was before, and this is the reality of what it is, and yet prices are going up. And I'm going to show you this in the charts. Now, what this is our showing time data. This is coming directly from Showing Time itself. Showing Time runs a majority of the showing data on houses in the entire country. This is for the state of Pennsylvania. You can see here that 2022 average is in orange. It's running right with all of the trends of 2020, 2021, really over the last couple of months. You can see here that showings, yes, they're down a little bit based on from last year's showing activity. But again, still pretty strong going in there. So the question we get all the time is, hey, should I buy a home right now? So let's get into that. You see a lot of national and local headlines right now. The cooling housing market enters into the great deacceleration. Home prices deaccelerate as the housing market downshifts. Buying a home at the wrong time can backfire big time. Here's why it may pay to wait. But the root issue of what drives house prices always supply and demand. So let's get into a couple charts here. This is actually a quote from Dave Ramsey, who has a very, very strong opinion on this thing. So here is single-family housing units completed from home builders. You can see here it's really been 14 straight years that it's been below that average of the 50-year mark for actual home inventory coming onto the market with actual construction happening. It's getting to the point where it's at that average where new home construction is continuing to pick up. And you can see here it's getting towards that average of inventory that is out there. Yet the peak home buyers that are out there is really your millennial stages, and they're getting into that home buying process as we speak. And now is that time. Here's the thing. There's about 4 million more millennials out there that are looking to purchase a property. Right now, they are sitting on the fences. They're seeing what's happening with their properties. Home sellers it's like the stock market. Home sellers they see the prices going up and up and up and up. And hey, if it holds at that price, they're going to put their home on the market. So you're going to start to see inventory rise. You're going to start to see millennials start to get into the market as those interest rates start to still hover around that 5-6% range, where they'll start to feel comfortable where they don't know whether it's going to drop down. They don't know whether it's going to drop or continue to rise with interest rates going on. But that is what we're seeing right now. Now, there has been a pickup in inventory. A lot of people are like, whoa, I see homes sitting more and more and more. And really, it's not from a big increase in new listings. It's more of a slowdown in the pace of sales. And that's very important. Just like what I said there, is as home sellers aren't necessarily putting on their home on the market right now because they might be waiting, seeing what those prices are continuing to doing, finding out what the affordability is going to be on their next home. They're sitting more on the sidelines and seeing that. Now, as you can see here, existing home sales by the end of this year, they're predicting about 5.4 million. This was updated in May of 2022 from the National Association of Realtors. So you can see here, it's going to get back to about pre-pandemic days, right behind that 2020 number. About 5.4 million will probably end up nationally. Definitely far below your 2021 numbers, which was way high. Really coming off that supply and demand issue. I mean, as you know, 2020, most of the real estate markets in the country shut down, which created a monster backlog of demand because the supply wasn't being able to trade really for houses. So what ended up happening is you had a tremendous backlog, which created a huge inventory. A huge sales bump because people wanted housing right away. People always are buying and selling houses. But hey, when you get shut down and you can't do anything, yes, it's going to backlog and it's going to fire out like a rocket. So right now we're getting back into those pre-pandemic days here, 2017, 18, 19, 20. But again, you've heard me say this numerous times in previous market updates. It's like you're driving down the highway at going 100 miles an hour, and then you back it down to 55, 60 miles an hour. Yeah, you're going to feel that speed difference for sure, but you're still going. It's really more of a de-acceleration, not an actual stop or braking at all. So that's what you see here. So as you can see here, I already said that home sales have essentially turned out to those pre-pandemic days. So what I want to do is get into the market stats. I'm actually going to escape out of this one and really back over to our market stats. And this is directly from GLVR, our Greater Lehigh Valley Association of Realtors. And I want to walk it through with you this way rather than that presentation, because I want to show you guys the actual report, what's going on, what's happening out there. You can see here new listings down about 9.4% compared to this time last year. Pending sales down. Again, a lot of buyers are sitting on the sidelines wondering what's going to happen with this market. Closed sales down 14.5%. Yet days on market is lower at 12 days. Now, why is that, you ask? Well, most likely that stat is down like that because one, these stats are really from the last about 3 months ago when we were in that heavy spring selling season. A lot of people really like to buy and sell real estate in that spring market, or at least go searching for those homes during that spring market. And a lot of them are putting homes on the market. Putting homes under contract at that time and then closing in June. And so what you're seeing there is really a days on market of 12. My prediction is in that fall, you're going to see this doubled with days on the market, especially what's going on right now from an active listing standpoint and homes sitting a little bit longer. And yet you still see the sales prices going up. From this time last year, 14.9% increase in the Lehigh Valley. Now I'm showing you the local stats of our market here in the Lehigh Valley, Pennsylvania. 14.9%. Average sales price up as well, up to $352,000 for your average sales price. And then again, average percentage of list price received up from last year, about 1.2%. Yet you can see here, a housing affordability index. I want to show you guys this. Is at 79, and that's actually down here. Let me get this for you. Housing affordability index. This matters. So a housing affordability index, when it's higher, when this number is higher, it means that it's easier and more affordable to buy a home. And right now, it is pretty low on this scale, meaning that your housing affordability is lower because why? Prices are up and interest rates are going up. So when that happens, you run into a situation where the affordability is going to be lower. And again, this is why a lot of your buyers are sitting a little bit on the fence because they want to know, hey, what's going to happen? Are the prices going to go lower? Are interest rates going to continue to climb? Is it going to be harder out there to buy a home? So again, that'll get back to our main question that a lot of people ask is it the right time to buy? Now, the one thing I want to get into, though, is the pricing. So let me skip through. You can see here, is it a good time to buy? Now, one of the things that this just came out literally today at 10 a.m. This is from the National Association of Realtors. It is their national sales statistics of home sales and what's going on in the market. So you can see here, home sales are down. We've already explained that in previous slides. Home prices are continuing to climb here. And so everybody, hey, is this going to drop? What is going to happen? You can see here, pricing is still pretty darn high compared to year over year. But the one thing I wanted to show you and why I don't think that the prices are truly going to go down is this is the percentage of sales that are coming from different types of buyers. So you have your first-time home buyers, you have your sales to investors, your cash sales, your distress sales, and your days on the market. Again, this information literally just came out at 10 a.m. today from the National Association of Realtors. So you're getting this for the first time ever. But what this shows you is that first-time home buyers still equate for a majority of the home sales that are out there in this real estate market. So what that tells me is, as you know, the biggest pool of buyers right now is your millennial home buyers. There's much more of them than the baby boomers and all that right now of entering that buyer stage. So yes, there is a segment of home buyers that are ready to pull the trigger. They are ready to pull the trigger. And what they need to know is, hey, am I buying a house that's going to appreciate? Nobody wants to buy a home or anything besides maybe a car, but really nobody wants to buy anything and know that it's going to go down in price. So that's why a lot of people are sitting on the sideline, because they don't know what's going to happen with that price. Here's the big difference, though. The distressed sales it's literally 1% of sales that is happening out there. And what that tells me is that there's so much equity in houses right now. There are very, very, very few homes that are truly in distress. We've already shown the data from John Burns and consulting and showing you all of those forbearance properties, the properties in foreclosure. It was very low. It was only accounted for about 13, 14% of the entire market that are truly, truly maybe in trouble. And so what you're seeing here is, even if all those homes hit the market at the same time, that inventory is going to remain steadily low. We're not talking about, especially in the Lehigh Valley, back in 2008, 2009, during that first recession, during my market time, what happened was there was over 5,000 homes on the local market. Today, again, you saw there were 770 homes in that market study. So the sale, the prices we're seeing are looking to continue to rise during that time. But you got to realize the distressed sales are down. Obviously, home sales by region, Northeast, South, the Sun Belt region is seeing a huge climb in that with that. So anyway, I'll get out of this one and go back here. So again, is it a good time to buy? I say yes. It's especially if it improves the quality of your life. You have to realize that, let me get back in the slideshow here. You have to realize that, hey, when you are going into either a rental or a situation where your job changes and you need to buy a home, move, whatever it may be, guess what? Prices are still good. Buying is still powerful. Rents are still on the rise. So yes, as prices go up, as your mortgage payment might be up a little bit, you got to realize rents are still on the rise. And when rents are on the rise, you're just throwing that money to your landlord. So you got to make the decision whether you want to buy or sell. But at the same time, if it improves your quality of life, it makes sense to buy now. It's an incredible time to buy. We're still buying investment properties right now in this market. We have one of the best quarters ever for buying homes. And so we are continuing to buy homes personally in this market right now. So let me get into this. Obviously, know us, know all your options. So reach out to us. I know it can be a confusing times right now. I hope this brought some clarity to you. But reach out to us. Go to dw-team.com. Download our seller guides, our buyer guides. Take a look at some past market updates I did. Rewatch this one if you have any questions. But again, go to dw-team.com get all the information you need. Reach out to one of our agents on there. Give us a call. We'd be happy to really go through a non-pressure understanding of what you're looking to accomplish. We'll customize whatever you need to make home buying and or home selling and or home investing an easy thing for you to do, but also give you the knowledge and clarity that you need in this ever-changing market. So would love to hear from you of what you think is going on with the market, what's going to happen in your opinion. I just want to provide you with the data, give you some of my thoughts on it. But hey, I have no crystal ball. We'll see what happens. I'll continue to monitor this data, continue to deliver the information to you and get you what you need. So go to dw-team.com and get all the information that you need. Thanks, guys.